So before we get into today's video, this is just something that's currently happening on the current space that I trade. In a previous video, I think I showed you how you can easily trade based on the US dollar index if you are trading currencies that are having the dollar in them. So yeah, there is a lot of indecision currently with the dollar index. I think the Fed basically caused chaos in the market. So yeah, you can see what's happening on the dollar index. Just chugging along this zone. It hasn't yet shown interest in really pushing this way or pushing this way. And if you then go to USD it's just basically the same deal. We are just chugging along, and there is no clear direction. By the way, this is the 4 hour time frame. If we go to the Euro USD, obviously we're just going to expect to see this kind of setup or kind of thing just inverse. Let's see. So basically, that's what we have on Euro USD. Again, the bulls have been defending this level for quite some time now. So basically, the markets have been in chaos lately. For let's look at crypto. BTC. BTC has been murdered. BTC was murdered by what has been happening in the markets. Crypto indices, stocks, basically everything at the moment, I think, is just a wait and see game. Everybody is just playing a wait and see game. I know analysts are saying maybe by next week, Monday, is when we are probably going to see some clear direction as to what's going to happen or where we are going to take this thing. Some analysts are currently saying if BTC drops again below the $30,000 mark, if it actually drops below the $30,000 mark massively, then there's just going to be chaos. Everybody is going to just sell their Bitcoin. But if it holds, because some people are saying there are some whales that are holding the 30,000 level there, but if they give up and it drops, everyone is just going to sell. But if it holds, then BTC might start going up. But anyway, it remains to be a sin. If we go back to my Forex chart, let's just check on GBP, USD. Again, we are just chugging along. We are just waiting for some volume, some movement. The goals of the markets are currently on leave at the moment, I guess, because yeah, the markets are basically quiet. It's a good environment for people who love to scalp to be doing their scalping, but even the scalpers is quite risky. Look at the size of these candles; they are just small. But anyway, so let's get big into today's video. I previously posted a video about the one of the banned strategies in trading forex, and it's mainly to do with forex trading, and it's a banned trading strategy. You get in trouble with many brokers. Let me say it, you get in trouble with many brokers if you use that trading strategy. Basically, it's called latency arbitrage. When we're talking about latency, it's just basically maybe computer networks terms. We are talking about speed, the speed at which signals are transmitted and received between two terminals, between two computers, between two ends of a network. So you find that some brokers, because of the nature of either their closeness to the market or their investment infrastructure wise, those brokers get signals, whether it's stocks, whether it's indices, whether it's forex, whether it's crypto, whether it is, they get signals first. It's just the nature of the game. They get signals first, and they're able to display those signals faster than other brokers. It's a fact. So what people figured out is, basically you just need to figure out which broker has got the fastest signals from the market. Then you find a broker who is kind of lagging behind. Now you just watch whatever is happening on that broker that is using the faster signals, and you actually trade on the broker that's lagging. That's basically what latency arbitrage is in trading forex and in other industries as well. So you are just basically finding a broker who has got faster signals, who is getting faster signals from the market, and they are quick to display those signals or those candles on their platform, on their terminals. And you find a broker who is lagging behind, and especially at news time or market open or major news announcements and stuff like that, you find that as fast as the news hits, some broker you already see a huge candle, but on some broker they have not yet processed that news. So you can quickly what, go into that broker with their delay of maybe 30 seconds, 15 seconds, 30 seconds, whatever the delay that they are suffering with their network. You can basically exploit their delay there. And because you've seen what is happening on the broker with the faster signal, you already know that, for example, if it's NFP, this is just an example, you probably already seen that the NFP candle has just shot up or it has shot down. But on the lagging broker, the candle is still so small. They haven't yet seen the signal, or they haven't yet processed it yet. Then you can quickly what, do your buys or your sells. So you are basically like having a crystal ball, like you know what's happening in the future. You are basically like trading in the future, because you can take trades before your broker can do anything, can hedge against you. But the problem is, now you are not trading against the market, you are basically trading against your broker. That's why this strategy is not allowed. And banks being banks and financial institutions being financial institutions, you already know that they enjoy it when it's them making money and not you making money. In stocks, it's kind of a different scenario. Latent arbitrage is a fact of life in stock trading. That's why I'm sure you Google some of these things. You find that most of the hedge funds that are trading stocks, they try to have their faster infrastructure, and they try to be as close as they can to the New York Stock Exchange, to the Nasdaq, to the Dow Jones, so that they are first in line to get the signal before anybody else. Whatever happens on the floor, they are the first guys to get the signal, and they are able to what, to get in front of everybody in terms of buying stocks, and then so they will quickly go and buy those stocks or sell those stocks. And then if they bought those stocks, then they are going to sell the same stocks to everybody else at a what, at a favorable price, and they take what, the difference as profit. That's how it happens. But in forex trading, it's, you basically are trading against the broker, and trust me, the banks and the brokers will not love your business. They'll basically stop taking your trades, or they'll basically tell you that you have placed some suspicious, if they suspect, because sometimes it's not easy for them to pick it up, but if they notice a pattern, or they start questioning your trades, then you are definitely in trouble with them. You need to then change your game or change your broker or whatever. But that's basically how it does. But where else did this strategy make me money? It made me money in crypto. Somebody asked, is there no other way to apply this latency arbitrage for like everybody? Yes, in Forex, you can do it, but it's tricky. If you get caught, the brokers will not want to do business with you. But here is what happened, and I discovered this with a friend of mine. We were trading crypto, and we discovered this by chance. It was just a random chance, and then I did not even know that it's called latency arbitrage or whatever it's called. So, where I'm based in South Africa, I'm based in South Africa. We have some crypto exchanges, and there is this crypto exchange. I will not mention their name in case they watch this video. I will not mention any names. So, what we observed, and it was completely by chance. What we noticed was sometimes, or a couple of times, this happened like a couple of times during the day. You would notice that if you look at Bitcoin prices on an international crypto exchange like Coinbase or like Kraken or like Binance or those other international crypto exchanges, if you look at the price there, it will be vastly different from the price that this local crypto exchange had. We noticed that eventually prices would then what? Catch up. So what did we figure out? What we figured out was we need to always have two charts open. One for the international crypto exchanges, get an average, an idea of where or what, for example, the Bitcoin price is on the international crypto exchanges. Then you also compare with this local South African crypto exchange, and you would usually buy Bitcoin at very low prices with this local South African exchange, and wait for the prices to catch up with the international prices, and then you sell what? Your Bitcoin at a profit. Very simple, profitable strategy that made us money a lot of the time. However, we kind of stopped it. I think we tried to focus more on synthetics, and we kind of lost our way with trading cryptos and stuff. I haven't really checked. I've kind of started going back to watching crypto again because of what has been happening in the markets. But we basically moved away from trading cryptos to like focus on synthetic indices, your volatility 75s, jump index, forex, as well as the other indices like NAS 100, US30 and stuff. So we kind of had our hands full and could not like focus on crypto anymore. But it was one way where you could apply this strategy. Of course, it's not allowed in forex, but we found that you could actually use the same strategy, same approach when you are trading crypto. So I'm not sure now if it's the same scenario that's still playing out with this local crypto exchange. I will have to confirm, but that's kind of what you do with arbitrage. You find a place where the signal, or they haven't yet caught up with everybody else in terms of prices and stuff. So you run there and you buy things at a very low price, And you definitely know, because you already know where the prices are on the international market. You already know where the prices are with your faster broker. So it's just a matter of time before the prices on that crypto exchange as well catch up to the prices that are what, that are on the international market, and you make money just like that. Same deal with sales. You find that on the international market, you'd find people would start selling their crypto, but on this exchange, nobody is yet selling, and you use that as a signal to quickly get out of what, the market before anybody else. So you would get in the market, make a lot of money, and get out basically without getting your hands bent. That's how we used to do it in crypto as well. I tried it in forex trading. It worked for some time, but that broker that I tried to use, eventually they caught up with it, and basically, yeah, that broker was also kind of a shady broker. But anyway, so that's where you can also apply these latency arbitrage strategies. It's not just forex trading. Of course, it's banned in forex trading. Brokers don't like it. If they suspect you are doing it, you're in trouble. But you can also apply the same thing to cryptos, to stocks. It's allowed, especially these hedge funds. They do it all the time. It's actually, it's sort of legal. It's like a fact of life in stocks, but well, forex, well, it's a different industry altogether. So yeah, uh, I hope I've answered somebody who asked this question. By the way, if you are new on this channel, please consider subscribing so that you do not miss future videos. um, like the video. If I did not entertain you for the past couple of minutes, but at least I'm hoping that I've given you one or two things to think about. If you're looking for forex robots, indicators, courses, everything that you want to download for free, we are big on free stuff on this channel. Visit the links in the description box below and see if you cannot find what you are looking for in those blogs. Uh, the broker that I use for forex trading, I believe they are one of the best brokers in Africa and in the world. For $5, you can start testing your strategies or your robots and everything in real market conditions. With just $5, you can open a real trading account. So you can sign up with them in the description box below. Good broker to be testing your robots, your strategies without investing too much of your money at first. Okay, I'll catch you guys in the next video. Leave your comments in the comment section below, your questions and everything. I'll catch you in the next video. Bye.